my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of LME 3-month copper and aluminium. I'll start with LME 3-month copper. Not much of a follow-on higher on Friday to the previous session's bullish closing long white Mariposa. Instead, we ended up with an indecisive spinning top as the market was halted by the combination of the overhead downtrend from the mid-May to date action, currently at 10.303, and the lesser recent 38.2% projected Fibonacci line at 10.349. Below we have the February 2011 high at 10.189, which doesn't look that strong. However, the other supports below from 2011, the trio of supports of the March high at 9999, the April high at 9947, and the July high at 9907, well, they have already conspired to not only mess up this market but really mess it up, and they are looking quite strong still. So far today, a try higher still but limited, up through the downtrend and edging just over the projected 38.2% Fibonacci line for dropping back down and holding at the short moving average, currently 10.214. Interestingly, it's looking like a bearish engulfing pattern right now. Actually, it's not that hard a thing to do on, given Friday's indecisive spinning top. LME 3-month aluminium. A small follow-on higher on Friday after the previous session's bullish long white Mariposa. It ended up being a hanging man pattern eventually, usually seen as bullish, and the third bullish white soldier. Now, as you may recall, over recent days I've raised the question as to whether the recent action since February might be a possible bearish bump and run reversal top. Now, I was open to this idea, but these latest moves higher seriously undermines this idea, and whilst I might revisit it at some future date, for now I have removed the possible label for it off my charts and probably will not even talk about it for a while. One possible cautionary and bearish point I made recently that I would like to revisit. I mentioned, and I quote, "This now brings last week's late high at 24.50 and the flatlining short moving average, currently 24.62, into the frame. And if this is really a rally worthy of the name, then it will have to tackle those two, as I cannot see a move higher happening unless those two are dealt with." End of quote. Well, Thursday and Friday were the first closes over both of those. It now depends if this market can maintain this remedy. So far today, a tiny bit higher than Friday, but a seeming reversion back down, testing the congestion at 24.78 and 24.68, halting ahead of the short moving average. It seems the market may have run out of some breath on the upside ahead of the 25.20 level, just as it did 2 weeks ago, and looking like a bearish harami right now. So I may still keep my options open regarding this the bearish bump and run reversal top, or maybe even those two levels, 24.50 and the flatlining short moving average at 24.62. That's still in my mind at the moment.